Wait and see. You know, when you can't predict the future, that can be a good strategy. But wait and see isn't always a good strategy when it comes to your retirement. In these uncertain times, the decisions you make today regarding your savings and investments can have a huge impact on your retirement. Phillip Statler and the team at Statler Financial have seen the market at its highs, its lows, and everywhere in between. They know how emotional it can be for you right now. So here's what they're doing. They're clearing their schedule to talk with you on the phone or on a video call to listen to what concerns you have and then offer help. The number to call is 863-285-3815. They are local and independent advisors who can help guide you through this. Call Phillip Statler and the Statler Financial team now. 863-285-3815 and schedule your time for a phone or a video meeting with the team. Call 863-285-3815. That's 863-285-3815. Investment advisory services offered through Statler Financial Services, Inc. Investing involves risk, including the potential loss of principal.
Says you'll be in my heart, Stefan. What his ex-wife is saying in court down in Miami, I think he'd be more welcome in a bathtub. Kind of gross, really, when you think about some of the things she's running. It's 8:39, 21 here before 9. Let's check in on your money, because that's never gross. Sometimes it's confusing, but at the very least, we can straighten it out for you. Head downtown to the offices of Statler Financial Services, where Phillip Statler is standing by, and it looks like some of the shift from growth stocks over back to the blue chips is going to continue today a little bit, but they're starting to see some bargains on the growth stocks again, aren't they, Phillip?
Well, they are. You know, the technical guys, they look at the dips and start buying some of the dips, and I think that some of the FANG stocks probably hit the tipping point yesterday, and we saw 2 down days pretty much in technicals in terms of the NASDAQ type stocks. And so we are seeing a little bit of a bounce today in that area. And the other area we're seeing is a shift really from some of the growth stocks to more dividend paying stocks, just to try to get some income coming out as more and more companies are increasing their dividends again.
Understood. It's kind of been interesting watching this shift, because during the time that we were recovering the market during the pandemic, and when looking at the market's recovery, NASDAQ and the Standard & Poor's did all right, and the Dow had been lagging it for the last couple of days. As we've done this shift, the money has been going into the blue chips on the indexes like the Dow. Dow was up 262 points again yesterday, while the S&P was, basically steady. It was off by 5. And NASDAQ continued to slide. It was kind of interesting. The shift toward the blue chips is something that's really palpable, isn't it?
It is, and we've seen that a couple times in the last few years where the Dow has outperformed the other indexes. And so it's just, maybe you'd say it's playing catch up, right? Because we know the NASDAQ has just been on fire for a while now, and it's maybe taking a little bit of a breather. I know people that hold those stocks want it to keep going the other direction, the upward direction, but and we may see that today as we're kind of looking at the futures.
Kind of looks like it. One of the news items I saw was that Amazon and Apple, Amazon especially, has just gotten the crud beat out of over the last 3 days. It's up something like 3% this morning, and Apple is also gaining again after losing the better part of 3% over the last couple of days as well. Those big growth glamour tech stocks just got the crud beat out of them, and now all of a sudden they're recovering, and that's contributing nicely to a rise on the NASDAQ stocks.
That is, and that's what you would expect, because let's face it, those 5 or 6 stocks that you mentioned, those are the ones that are going to push that NASDAQ heavy, and that's what we're seeing this morning at least.
Understood. You alluded to something that we talked about before we went on the air, that, we're taking advantage of stocks that had the crud beat out of them during the pandemic in hopes that this vaccine news is going to kind of mean light at the end of the tunnel. But even beyond just going back to price buying and balancing which stocks expected to do well during the pandemic versus the ones that didn't do well, there's also a shift toward, and you mentioned this, dividend stocks instead of just the value itself, right?
Well, that's true. And so a lot of times we look at dividend paying stocks as kind of more of a value based stock. And so we're seeing people now, and that could be some of the shift, right? Is that maybe growth is going to start to lag a little bit because let's face it, we've seen 4 years of some pretty good growth in the indexes to more of the blue chips, the S&P 500 stocks that are paying decent dividends, because we're still not making it at the bank. The interest rates are still so low that if we can get a dividend with the possibility of some growth that's paying, 2.5%, well, you can't get a 5-year CD that pays that. So, that maybe makes some sense from people who need some income to start looking at some of those dividend paying stocks.
Yeah, the guys with the serious money are looking at banks as basically being an old sock with a better lock, because you're not going to gain anything at the banks. You don't even keep up with inflation anymore.
That's right. You take into, let me tell you, don't get me started on banks, but if you take inflation,
I got
plus,
friends in banking. Be nice now, would you?
Well, I do too, but it's not their fault, right? It's not their fault. It's the Fed's fault. So, if you take what they pay you minus inflation, minus what you have to pay in taxes, you go negative on those returns.
Actually, I got a hunch even before taxes, you go against inflation with 2% inflation and 1.5% interest rates of the banks. Those guys really have a hard time trying to make money off of traditional savings these days.
That's right. You just can't do it. And so, there's alternatives out there, and that folks need to be investigating those alternatives if they need to get some kind of return.
Understood. Talking about stocks that are coming back, one of my headlines on one of my tip sheets is we're talking about Amazon and Apple. Alibaba is suddenly going crazy for this week as well, isn't it?
Well, now Alibaba is an interesting thing. I'm not sure how it's doing this morning, but it got beat up pretty bad yesterday with some of the regulations. It seems the Chinese government seems to be tightening their regulations on tech firms, especially big tech firms, which is kind of what Alibaba kind of fits into, right? And it's also playing havoc with Jack Ma, who's the guy that really kind of started Alibaba in his other company that he's trying to go out and do an IPO on. And I think I saw where between Alibaba and his other company he's trying to do an IPO on, he lost $280 million yesterday.
Yeah, word is the Alibaba's returning, but I wanted to give you a chance to comment on it because it's been having so doggone much legal issues over there. The Chinese government likes people making money, but there's kind of a limit to how much they like them making.
Oh, that's right. They let's face it, they're a controlled economy, right? They determine what people can make and what they can't make. So, yeah, Alibaba closed down 8.25% yesterday. Right now is down another almost 0.75% this morning.
Okay, I had it flattening out and going up a little bit, but we could be very well looking at different. But it's at very least not as bad as it was yesterday, right?
Yeah, exactly.
Absolutely. On the domestic side, where we actually do know for sure how the companies are doing, we got a bunch of reports because earnings season continues, and I've got a real Duke's mixture of companies that are gaining and losing on my winner and loser list this morning.
Well, let's see if we can find some of them. Yeah. So the first one I have is Lyft. Lyft, they lost, which is crazy, $280 million during the third quarter. And that was more than double what they lost the same quarter last year. But they reported better than expected revenue for the quarter. So, they're just not quite working together there. They are looking at developing and competing with Uber for a food delivery service. And so that's on their project board now. They're trying to get that pulled out. And they're making up for their loss yesterday. They're up 4.8% right now.
They're one of the ones I was seeing as a gainer. I was kind of wondering when they were going to respond to Uber Eats. It seems to me I can't watch a cable TV channel without an ad for Uber Eats on it somewhere.
Yeah, that's right. Let's face it, that's just the kind of a next iteration of what they do. If you're going to deliver people, why not deliver food?
Absolutely. That's interesting to see them finally noticing there's a growth market somewhere they ought to be into.
Yeah. So talking about blue chips, I got one for you.
Mm-hmm.
AT&T.
How they do?
Well, I don't have an earnings report, but what I do have is they're laying off 7% of their work staff, 1,750 workers. are getting laid off.
Hmm?
Yeah. And the investors are liking that, right? They were up almost 2% yesterday, and they're up another 0.6% this morning. So, but I wanted to mention it because it's another case where we're seeing companies laying people off, late in this COVID cycle, and we're going to continue, I think, to see that as companies try to become, more laser focused on what they really need in terms of labor.
Labor, it's the lean and mean mantra coming back again.
It really is. And as more and more states pass this $15 minimum wage law, you're going to see more and more of this, of companies trying to shed what they really don't need so that they can pay the people they do need what they need to pay them. So I suspect we'll continue to see this throughout the next probably 6 months or so.
I suspect so.
So here's the next one. I want lemonade. Do you know what lemonade does?
No, I don't. I'm betting they got something to do with drinks.
No, they don't. And this one, I really had to kind of dig a little deeper for this one. Lemonade is a mobile-based insurance company.
Maybe their problem is in branding, huh? I've never heard of them.
I hadn't either, but they provide renters insurance, homeowners insurance, property type insurance, not only here in the United States, but Germany and the Netherlands also. But it's all mobile based. I mean, you have an app. If you need to file a claim, you talk to a artificial intelligent bot that files your claim for you. I find that kind of interesting, but they lost 57 cents a share, but that was better than expected. They were expected to lose over 60 cents a share. So good things there. Revenue was also ahead of forecast. So I guess maybe their pricing is good. So revenue's up, and they expect their current quarter to be a pretty good quarter. So they're up about 2.7% this morning.
I suppose servicing your insurance needs at home at a time of lockdown, especially over in Europe where you mentioned they got a market, that might be a growth concept, wouldn't it?
I think so. And given, mobile, right, they're limiting their labor force and doing mean and lean, trying to make that work. The last
Valid
one
point.
I have for you, Dave, is Fair Isaac. People don't maybe know what Fair Isaac is, but that's your FICO score. And they are a publicly traded company. They reported earnings per share of almost $1, not quite $1 more than expected. They saw their revenue exceed the forecast too. And so they are, they haven't had a trade yet this morning. So we don't have any futures on them, but they closed up 0.5% yesterday. And they're a pretty expensive stock, Dave. They closed yesterday at $432 a share.
Geez, you need a good credit score to buy that company, don't you?
Yeah, you do.
Pretty much up there. Resetting the table for the morning, it was one of those mixed bag days reflecting that adjustment in big portfolios. Dow was up by almost a full percentage point yesterday, while the NASDAQ and the S&P were both off. NASDAQ considered a pretty substantial slide. We mentioned that some of the big NASDAQ stocks were recovering this morning, and I think I see it in the futures so far this morning. Phillip, 45 minutes early, how do they look?
Yeah, we do, Dave. As a matter of fact, everything on the stock side of the indexes are moving up today. We've got the Dow up about 0.6%. We've got the S&P 500 up 0.7%, and we got the NASDAQ up almost 1% this morning. So everything's looking good there. The question is, can we finish the day as strong as we started the day? Looking at the commodities side, a little different message there. We have silver giving back about what is picked up the last couple of days, down 2%. Gold's down 0.75%. Though we got to be happy about crude oil, heading up 2.5% this morning to $42.36 a barrel.
If it'd stay in that trading range, we'd all be happy. Cheap gas and pump the oil out of the West Texas oil fields, right?
That's right. Yep, that'd be good for our economy, especially Texas.
Absolutely. Mixed bag on the foreign markets exchanges. The Asian markets were mixed at the close this morning. Great Britain and Germany both are up substantially midway through their day. Phillip, it's one of those times the big guys are adjusting their portfolio because they can control risk day to day. We can't do that. How do I get a hold of you to get a small guy's way to manage risk in this world today?
Dave, there's two things I think people need to be looking at today. One is their risk in their current portfolio. That's why I developed the financial X-ray to X-ray their current portfolio and make sure the risk they have in that portfolio matches up with the risk that they're willing to take. The second thing I think is important, Dave, is taxes. Make sure that you have the most tax efficient portfolio as possible, especially heading into retirement, because taxes are as low as you and I are ever going to see. Give me a call at 863-382-0037, and then join me for the Statler Financial Radio Show this weekend. Saturdays, 6 a.m. and noon, Sunday, 10 a.m. on Highlands News Talk, 730.
And, of course, back here tomorrow morning, same time on Light FM. Phillip, thank you so much. Let's hope we can keep the green ink going today, right?
All right, man, you have a great day. Don't get too wet, and I'll talk to you tomorrow.
I got you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. Weddings.
Hey, folks, again, I want to thank you for joining us today. As we get halfway through this week, again, thank you, veterans, for your service and what you've done for this country. Guys, have a great day. I look forward to speaking to you again tomorrow. Bye now.